Bang! So I am John Nigerian back here for Market Rebellion and letting you guys know that we've got 3 at 3 with Dr. Jake coming at you right now. This is where, of course, I break down some unusual activity for you as far as what we're seeing live in the market at that time. So with no further ado, let me get to the disclaimer real quick. Disclaimer just says, as you see, that this for educational and informational purposes only. I am not your investment committee. I am a trader, and I'm going to show you what I am trading, what many of our folks that follow our unusual option activity are trading, like my brother Pete, like Ryan Mastro, like Mike Yamamoto, like Chris Sikora, like Brian McCormick. We all trade this stuff, folks, throughout the day. So we're giving you guys a glance into what we do. And as part of showing you that, I'm showing you exactly how we post it up for our subscribers. So with that said, let's dive in. All right, SLV. You may recall that we talked about this one on Friday because there it is, 3:20 at 11:09 a.m. Central Time. We talked about SLV when it was $11.80. January 13 calls bought aggressively. You can go back and look at the replay of this because it's still posted and still up there. Here was where that stock was on Friday. So we started seeing that activity coming in at 11:53, ran it up to about 11:84, as you remember seeing on that slide. And then today, here's today's move. Pretty nice move to the upside out of the iShares Silver Trust. Mid-session, it's up almost 6% to $12.25. And yes, they are still buying. And yes, I am still long. All right, so that was a recap from Friday. Now let's give you fresh meat. VXX, okay? So little volatility play since so many folks are, tracking both unusual volumes and volatility. Certainly a volatile day. I mean, my God, it might be the most volatile day we've had when you track all the highs and lows because we were lock limit down 3 minutes after futures opened on Sunday night. Then we came all the way back and ran to the upside when the Fed had to step in and say, okay, I guess it's Q infinity and beyond. We'll do whatever it takes. Unfortunately, that's about all we've got so far because Senator Schumer came out and spoke about what he was going to be doing in terms of he thought that they would get something passed through Congress. Well, hadn't happened yet. And meanwhile, a lot of Americans that are counting on these sorts of support systems that are part of this so-called stimulus package, well, hasn't passed through Congress yet, so the Fed's doing all they can, but Congress has to act. Nonetheless, take a look at VXX. Even though, as I said, from high to low, from low to high, we've been all over the place, look at this one. 17,000 June 24 puts bought in the VXX for $1.37. So that's with the VXX at 54.65. So just at the, just a little bit ago, an hour ago, they were buying these puts aggressively. And what does that graph look like? Let's take a look. Well, we're breaking down already. We're down to 53.99. Again, where was it when we first started talking about it? Almost $1 higher. Let's call it 80 cents higher. It's already breaking down the VIX, the VXX. So keep an eye on this one, folks. There's the graph again. Keep in mind also that 17,000 options is 1.7 million share equivalent. That's a big trade. Somebody putting on some real purposeful trade, believing that volatility will continue to trade down. It's down almost 11% right now. Second trade on our 3 at 3. KRE. Now, I love when I'm following a trader who's been right. And whoever the traders are that have been just piling into the KRE Regional Banking Index have been exactly right. Let me show you what I mean. First of all, today they're buying the April 27 puts. So a put strike out in April at 27. So in other words, about a month into the future, because the 23rd of March today, they're buying options that expire the third Friday in April. So I'm calling that a month out. Just out of the money, because this is a put, which is the right to sell, and that is at the 27 strike. So they are buying these puts aggressively, bought almost 10,000, about a million share equivalent, and paid about $2.40 for these put options. Now, there you see the regional banking index today moving all the way down to 29 to the downside. But how right has this trader been? Well, let's see. Well, no, I don't want to get to that one yet. But trust me, they have been buying puts in this one since it was in the mid-50s, as you can see, a month ago. And now it's down another 7%. This regional banking index has just been falling apart, folks. All right, the other one is HYG, one of my favorites. Why? Because high-yield bonds. If there was ever a place in the markets that were in trouble right now, it's high-yield bonds. And this is a trader who's been right again and again and again. So take a look. March 16th, they were buying puts in here at the June 87 calls. That was a bullish call. That was the last time anybody was bullish in this one, because look at that. Just one day later, the 17th, they were buying puts, 10,000 of the 75 puts. So I'm showing you this to show you, these big traders are not always right, but when they are right big time. So again, they're buying the 75 puts in September with the index at 76.28. Then, just 2 days later, they were buying again the May 71 puts with the HYG at 72.50. Then, a day later, as it made a dramatic drop to 66.64, in other words, $6 full for this ETF, they bought 20,000 of the May 70 puts. Then, on last Friday, they were buying the April 65 puts. Now, they're buying 23,000 of the April 64 puts. Folks, these are big buys. 24,000 or 26,000 is 2.6 million share equivalent. So that is a big bet. And they paid $2.76. This isn't a cheap, oh, let me throw a 10-cent put out there, or let me throw a 20-cent call up above the market. Nope. This is an option that is out of the money, clearly, but because their 64 is the strike price, and it was trading 68.39 when they did it, but they're paying $2.76. That's $276 per put option. So watch this one, folks. Watch this closely, because HYG, boy, people need bailouts. Small and medium enterprise need bailouts. And some of these guys that are a part of this particular ETF, the high yield ETF, they're going to need bailouts. So what were they buying today? Like I say, they're buying the, last Friday, they were buying the 65 puts, paying $2 for those. And there's the graph as it breaks down to 68.63. Again, that's the high yield corporate bonds, down almost another 1.6, 1.7% today. So I am John Najarian from MarketRebellion.com. Just a little over an hour from right now, we'll be going live with Tony Dwyer of Canaccord, my brother Pete, myself, and a bunch of our greatest market strategists and technicians, and we'll be talking about what we see, and even more importantly, folks, we're going to answer your questions. So if you want some questions answered by me, by Pete, by the folks that populate our blogs with all this great information, as well as Tony Dwyer from Canaccord, make sure you sign up for this one, because the only way you can ask us a question is to be in there live. Costs you nothing. It's a free webinar. We're going to be doing it on Zoom just over an hour from right now at 4:15 Eastern Time. Thank you for joining me, folks. I hope you enjoyed it. I hope you found some good things to pay attention to there, and we'll see you in just over an hour. Thank you.